Hey everyone, meet Kevin here. Welcome, course members. This is really exciting because I've been working on this Series A seed round for this company for years. In fact, I look back at when I first came up with this idea and started working towards it. And not only has the idea been in the works for a very long time, but I actually started buying domains and getting ready for this idea way back in 2019 with all the experience of the years before that leading into this idea. So this is a pretty cool moment, and I'm really excited to share it with course members first. There are a few things that I want to explain because they'll make a lot more sense if I just explain them now, and then we're going to go over directly to the company website, and so we'll get to see it all together. So I'm very, very excited about this. Now, the first thing that you got to know is I'm a big fan of building wealth through real estate. I think everybody should build wealth through real estate. And I think there are opportunities to basically scale the opportunities that we have to build real estate at a level that really hasn't been done before. And so when you invest in a startup company, in this case, one that's going to be chasing real estate at scale, it's important to know that usually when you invest in a startup, you're investing in a company at some form of valuation that's usually higher than the cash the company has. Let me make that really clear. So there's this guy who ran WeWork, okay? WeWork failed, right? And then it came back, right? It went public, then it went private because it went through these disasters, right? And the founder of WeWork is getting into real estate. He's starting a company called Flow. The company has not done anything yet that we're aware of, doesn't have any operations or anything. But why I'm mentioning Flow is because Flow just pulled something interesting off. Flow just raised $350 million to disrupt real estate. And they did so at a valuation that led them to be worth north of $1 billion. Now, why does that matter? Well, it matters because this, going over to this, means you're paying over $2.8 for every dollar of cash the company actually has. This is called dilution in the stock or venture capital world. It's basically like, hey, we're giving you 350 million and you're telling us your company's worth $1 billion, but it's going to take us somewhere around $2.80 just to basically have $1 of assets at that company, right? And there's a reason for that. Most companies do that because companies have operating structures, they have talent, they have people, they have systems, they have processes. And so this is a way that companies can sell for a multiple. They can sell for a multiple of book value, they can sell for a multiple of sales, they can sell for a multiple of earnings. The point is, you're almost always paying a multiple for a company. But I decided with the company that we're launching, we don't want to sell for a multiple. And the reason for that is we want to attract as much as possible and work together with our seed investors as much as possible to make sure everybody gets in at $1 equaling $1 in the seed round. So instead of going back to sort of that Adam Newman example, if we were to raise $100 million to disrupt real estate, if we raised $100 million, the company would be worth $100 million, at least at what we're selling the shares for. The company would technically be worth more, but that's what we'd be selling the shares for. So let me give you an example. Let's say that I personally buy, which I expect to put somewhere between $5 to $20 million of my own money into this company. Let's say I buy $10 million of shares of that 100 million, right? So Kevin put in 10 of that, was in of that. We'll put that, there we go. Okay, if that was the case, then Kevin would own 10% of the company. See, that's because every single dollar that's going in is going to equal $1 in seed round valuation. That means there's no dilution. This is kind of wild and unheard of, and some people are like, why would you do that? And the whole point is because I want to grow the company together, and we'll have awesome options for compensation and awards and that in the future when we actually accomplish our goals. It's all going to be goals-based. Now, usually, even companies in this real estate world tend to trade for anywhere between 2 to 2.5 times book. Think about what that means for a moment. If a company has in the real estate world $100 million and it were to trade for 2.5 times book times 2.5, then the company would be worth $250 million technically, right? There we go. We'll just put an M there. That's basically how usual valuation structures work. But again, we're not doing that for seed round investors. $1 equals $1. If we raise 50 mil, $50 million company. Every share is $1. It's really, really simple. Now, I wanted to start by explaining that because, first of all, dilution is really complicated. A lot of people who haven't invested in startups before don't understand that a lot of your money goes to dilution. And in my opinion, it's a ripoff. Now, hey, maybe we'll disrupt the way startups are done. But I think, hey, if a company's going to start with money, then let the valuation be equal to what other people are able to start their investment in as to what the original owners are starting at. And there can always be stock-based comp in the future, which there will be. The neat thing about the way we're structuring that, by the way, is that any kind of stock-based compensation that I receive in the future, because I'm not going to be getting a salary at this company, will be subject to us either selling the company or going public, going through an IPO. And my dream is to IPO this company, so I don't really expect this company to be sold or in any way like liquidated or closed. I expect to go all in on this company and ride this through IPO and grow it from there because, well, that's what I want to do. Like I want to have a company so that way when there's a stock market dip, we could all go, hey, let's buy the dip on the company we grew up with, and that's the company that you're about to learn about. So those are just some visions and dreams that I have. Obviously, we can't guarantee anything, but so is life, right? So what is this company? Well, it's going to be real estate related, but we've got some pretty unique tech spin to it as well that fortunately ain't going to cost any extra, which is really cool. So let me go ahead and reveal it to you. I will reveal the website to you. We will be releasing the slide deck probably first thing tomorrow morning, the actual PDF version of this. But the website is basically what the slide deck is going to be. We're just putting the website into the slide deck. And we did some wonderful last minute updates here to the website that we want incorporated there. So let's go ahead and now go for the big reveal in terms of what the heck this company is called and what the goals are. So folks, here it is. The company is HouseHack. Househack.com is the website. You can go there now. It's househack.com. And you can see here, introducing our new real estate company. This is the course member pre-launch video that you had already seen, or probably have already seen. And the goal is to buy wedge deal real estate. Wedge deal real estate that we can basically buy under market value single family and multifamily homes and build a portfolio that in the future we can do some special things with, like slice up the portfolio and pull off a roof stock, or take our assets that we have and master creating our own AI software or augmented reality software and then licensing that to others while using it first within our company. Right now, the only technology that we have created, and I say this very specifically because I don't want people to think we're a tech startup, it's a real estate startup, but the technology that we already have and have been working on for the past 3 years is actually a wedge finder AI app. And so basically what happens is when I go into a market, whether it's Dallas, it's Florida, it's California, it's Vegas, it's Utah, it's Colorado, any market that we think we want to invest in single family or multifamily wedge deals in, it's all about wedge deals. I could use my Wedge Finder app to help me find those properties a lot quicker. Then I can do my analysis on that property and we can execute and buy. And so basically that, with the exception of properties that might come to us directly from a real estate agent, if they're off market, which of course we might get connections like that because we'll be pitching this company on our YouTube channel, Meet Kevin. So that way when, or the Meet Kevin YouTube channel, I should say. So that way if I say, hey, if you got a deal in an area or whatever, you could send it to HouseHack and HouseHack can buy it from you. The neat thing there is we could build connections from there to get deals, but we can also scrub every single property that's on the market with our Wedge Finder. And our Wedge Finder is an artificial intelligence program that basically looks at the property and says, this has characteristics of a wedge deal. And if you've been through the courses, you already know what characteristics of a wedge deal are. It's all about the way it looks. And that's what the machine, that's what we've trained. We've trained an AI, a set of AI software, artificial intelligence, to perfect finding wedge deals. So every morning I wake up, I can find me wedge deals in different markets. Boom. I see dozens of them every single day. It's great. And I'm like salivating because I'm like, I can't wait to actually go buy these homes with house hack. Now, we probably will be waiting to go buy homes with house hack because ultimately what we want to do is make sure that 10-year treasury yields stabilize because those are going to link up to 30-year mortgage rates. And we want to make sure that we start seeing yields and the 10-year treasury and inflation start coming down. And that could potentially start signaling the most dangerous or most fear point of real estate, which would then be the perfect time to get in, right? We want to get into real estate when we have peak fear. So that way we get a little bit of wind at our back. We don't want to be buying in like Q1, Q2, 2022, or in markets that haven't adjusted yet. We want to buy in markets where there's already pain or blood on the street, so to speak, right? This is what I'm always preaching, and this is exactly what we want to do with this. So let's just scroll through the website a wee bit here, and then we'll do some questions. So in order to invest, you have to be an accredited investor, and you can actually press this button here, apply to invest. We'll go through that in a little bit, though. Let's go through a little bit more of the website first. So what you're going to see is you see some information about how valuations work, kind of something like what I've already described, so we won't repeat that. You'll also see some information about how markets are already starting to fall in certain areas, whether those are Zoom towns or San Francisco or it's Miami seeing a lot of price reductions, mortgage applications at 22-year lows, homeowner affordability at 14-year lows, purchasing power being eradicated by 37%. Home builders in complete distress, increasing the amount of incentives they're offering people, right? Bloomberg telling us that fear is in the market. We're already seeing prices fall nationally, by the way. This is a good thing. And this creates an opportunity for us. So you're going to see a lot about that opportunity. Opendoor and Redfin are going to be some of our big competitors. We'll talk about them in just a moment. And so you can see some more information here about what's happening in the real estate market. Talk a little bit about myself and the licenses and some of my background that I've gone through. And so here we go. Meet House Hack. So House Hack buys under market wedge deals identified through our connections, our already built AI wedge finder, and our research. Then we'll fix them up with our market-tested uniform. The uniform is how properties should look, where we're spending as little money as possible to make as much money as possible. Then we rent them out to qualified tenants, short-term and long-term tenants first. That's going to be a mix of Airbnb, depending on the location, and long-term tenants where we can. The cool thing is I've never had an eviction, and I hope House Hack never has an eviction either, because most other companies have like 15 to 30% evictions, because quite frankly, I don't think they know what they're doing. But anyway, in the future, right now, we're just going to do short-term and long-term tenants. In the future, we'll do medium or flex. This is sometimes looked at as like the Netflix of real estate, where you offer a subscription service for people to be able to move between furnished properties, which is pretty neat. And in the future, we'll also have multiple different software suites that we expect to be able to license in the future, because we're going to build the software for ourselves with cash flows that we get from real estate. The nice thing is, we're going to take the cash that we raise, go buy homes, and immediately have cash flow, because we don't need to refinance these properties or spend money on software or developers, because we don't have any developers right now. We don't need any developers. We had an outside firm help us for the last 3 years on the Wedge Finder app, and that's done. So we don't have that cash burn of like a tech startup. That's why I say we're not a tech startup. We're a company that's going to create tech in the future, but we'll do that after we deal with the low-hanging fruit. The low-hanging fruit is buying real estate below market value in a very painful real estate market. So in the future, we will compete with, in my opinion, roof stock, which is basically where we take tranches of our real estate portfolio and we could sell them out, slice them out to other investors while retaining management of those properties. We'll compete with Redfin and Opendoor basically day one, because those are iBuyers and we'll kick their butt day one. The cool thing that you got to, and then Vacasa is like a rental management platform. We'll be doing that as well. But something to know about Redfin and Opendoor is they can't pay as much for a house as we can. Let's say a house is in a neighborhood that's worth $600,000. It needs $50,000 of work and it's selling for 400 grand. And Opendoor and Redfin are offering to pay 400 grand and it needs 50K of work, right? Well, Opendoor and Redfin have to put in a margin, a profit margin, potentially a large one, of it, generally between 6 to 10%, because they're going to have to pay agents again when they go to sell the property, agents, holding costs, and repairs. We won't have those expenses. So for example, if Redfin and Opendoor cap out at 400,000, we could literally run the cheapest, most targeted ads in the world and go, thinking about selling your home to Opendoor or Redfin, sell it to us and we'll guarantee you get $5,000 more, $10,000 more. Same experience for them, Now we leverage the brands of Open Door and Redfin, competing with them, paying more for them, for those properties, while still getting sick wedge deals. Like, there will not be a shortage of wedge deals. And that's what's really, really cool about this opportunity, because we're renting the properties, not flipping the properties. If you ignore sort of technology, you could look at some of the old guard, so to speak, American Homes for Rent, Invitation Homes. These are companies with $13 to $23 billion valuations. According to Reuters, Starwood Waypoint has 30% evictions, and Invitation Homes files evictions on nearly 15% of company or tenants, which is pretty remarkable. So again, we're going to maximize the property's best use based on whatever property it is. So for example, short-term rentals will probably be in more like vacation style areas. Maybe think like Joshua Tree or Palm Desert, right? Or even along the beach. Those could be more Airbnb style properties, whereas long-term rentals will likely be in areas that are less desirable to Airbnb, or just have stringent Airbnb rules. We have to keep that in mind as well. In the future, we could also get into things like fintech or banking or whatever, because quite frankly, if a real estate company had its own banking charter, we would be reducing our borrowing costs a lot, right? We talk a little bit about some of the software that we expect to compete with in the future. Some other things about how we compare to like a syndication or a REIT, because we're not that. Very important to remember this valuation structure, that $1 equals $1. So if you invest $1, you're getting $1 of equity in the company, and then there's $1 of cash actually there. If you think about it, actually, and I hate making this reference, but it's kind of like what a stable coin should be, right? But of course, we saw how stable coins ended up. Terrible. But anyway. The important thing for us is that we are taking, so I don't like making that reference to stablecoins, but we're taking this money of $1 being $1, and we're putting that to work in real estate, cash flowing real estate. That's the goal. I take no salary. The only way I make money is with stock comp in the future. And that'll be based on a percentage, based on every time the property increases, or not the property, the company increases in valuation by 50%. So no traditional upfront dilution, but there's also going to be something really cool here. Okay, listen to this. The earlier you fund, the more warrants you get. Now think of warrants as options, like call options almost. Now options and call options are contracts between you and a third party. So like if there's a company here, the call option is between you and a third party. Well, a warrant is actually an option between the company and you. And the warrants that we are giving to our early seed round investors are actually really neat, and they're not dilutive either. Here's how it works. If you invest by September 30th, and let's say you invest $300,000, you will get the right to fund up to an additional 55% at the same day one valuation at some point in the future. That point in the future will probably be once we deploy about 25% of our capital, or $25 million, whichever is less. So what that means is, let's say you invest $300K today, you would get the free option. It costs you nothing, but you would get the option, the right to invest an additional $165,000 at some point in the future at that same 1-to-1 valuation. Now, if you invested, let's say by November 30th, and you invested $50,000, then you would get a 40% option, which is about another $20,000 at the original valuation that you can invest in the future. And the reason that's not dilutive is because, again, $1 equals $1. So for example, if we raise $100 million the first time around, and then we raise another 50 during the second phase of the seed round where we go back for the warrants, well, now we have $150 million and the company's worth $150 million, right? No, or at least that's the valuation shares are being sold at, because the company will presumably be actually worth more. You're just getting to buy it. It's kind of like a wedge deal. It's kind of like a below market value deal. Additionally, if you are a course member, this is the big course member difference that we added in here. If you are a course member, you will have the ability to add 10% to this table above. So basically, in that case, if you invested $300K by September 30th, you'd have the option to invest an additional $195,000. That would probably be sometime in 2023. And you do not have to fund that full $195. You would have the option of funding up to that amount. Now, we will have a 60-day window when those warrants are redeemed. And if you do not fund within that 60-day window, you would lose your options, unfortunately. Your warrants would expire worthless. So this is what I expect to fund. If we raise $35 million, I expect to put in $5 million. If we raise $75 million, I expect to put in 9. If we raise $150 million, I expect to put in 15. If we raise $200 million, I expect to put in $20 million. So it kind of gives you an example of what I expect to actually invest in the company. Now, again, we will also have stock-based comp, and we're going to have all of the documentation for the stock-based comp that'll come out in the future. You can kind of scroll through this and get a little bit more information on the company and that. We're going to go through the apply to invest section in just a moment. But the stock-based comp will be very, very interesting. We are going to do it in such a way that stock-based comp is awarded when the company goes up in value by 50%. So here's an example as to how that might look. Let's say the company raises $33 million. Let's just say that's how much the company raises. So there's $33 million that the company raises. And at some point in the future, let's say the company is worth $50 million because we've IPO'd and we're able to do $50 million. That's how much we're able to, sell shares for or whatever on the open market. Well, as long as the company is worth that $50 million or 50% more than the original valuation, then I would get an equivalent of 10% of the company as sort of a stock award. And early employees will get 1/3 of 1%. These are very similar to like an Elon Musk style structure. Now, if the company then goes up in value again by 50%, then in that case, it would be worth, say, $75 million. Then there would be an additional 10% award, or in that case, $7.5 million. Now, the neat thing about that is if somebody invested $500K at $33 million, and now the company is worth $75 million, and then what would we have? Let's see, 75 divided by 33, that'd be 2.27. Their $500K would now be worth $1.35 million, right? It'd be more than a double in that example. So to get to the second tranche, the company has to more than double. And that's because the 50% growth compounds, and it actually becomes harder to achieve these additional tranches in the future, which is really neat. There'll be 14 tranches. And again, we'll have a whole spreadsheet about the released for this. So there'll be 14 tranches. But what's very, very important for you to know is that based on the structure that we have, I can't own through these stock options more than 29.9% of the company. And we have these options. I believe they're set for 30 years is sort of the goal to hit these tranches. We may never hit all of those tranches because some of the tranches go up into the billions of dollars. Because if you compound at a 50% growth rate over and over and over again, not necessarily every year, but whenever we do, it's going to take a while to get there. So the cool thing about this is it's fully transparent. So look, you go in, $1 equals $1. Kevin makes $0. I make my living off of YouTube. It's fine. I make $0 until this company IPOs or we sell it or some like liquidation or whatever. But I don't expect that. The big thing would be we're investing $1 for $1. And again, Kevin gets no options until IPO or again, we sell the company or something like that. So, which my expectation is to IPO because I want to ring the bell with House Hack and then have a massive House Hack meetup. And obviously I want my shares to grow as much as possible based on my original investment in the company as well. So I'm fully incentivized not to sit here and like milk a salary or some kind of junk. My goal is to grow the market cap of this company. It's that simple. So if you are an accredited investor, you can invest now. If you're not an accredited investor, you'd be eligible to invest maybe when we release our Reg A offering. Our Reg A offering is expected maybe towards the end of 2023. So we would be going through our seed round, our warrant round, and then probably a Reg A. The Reg A will probably not be at a 1-to-1 valuation. It'll probably be done at a higher valuation, which could be like 2 times book or whatever just the market demands at that point. Reg A's do take about 6 to 9 months to actually file and get through, and we're going to close out this round before we even file. So that gives you an overview of everything. Now, we will do Q&A in just a moment. I suppose I could quickly explain how can you be accredited. There are a few ways you can be accredited. You can have an income of $200,000 yourself for the last 2 years, and you could send us your W-2. I'll show you where to do that. If you are a joint filer, it'd have to be $300,000 of income. You could send W-2s for that. You could have a net worth. Okay, that's the easier one, right? The 200 or 300K income. The harder one is having a net worth of over $1 million net If you have that, great. You could go to investready.com and get a certification letter for your net worth, because they have to subtract liabilities, and that's all got to be done through InvestReady. If you have a Series 65, 7, and then there's another license. There's one more license you can have. If you have one of those licenses, you could probably get accredited. We're working on figuring that out, because the law says you can, but InvestReady says they don't verify people with the licenses. So we might just take those people on. So just email us at ir@househack.com. And I expect that if you have that sort of license, we might be able to verify that you are accredited by verifying your license. So if this is something that you wanted to invest in, what you could do is you could go to the apply to invest button. We can go through some of this together and then do a little bit of Q&A. So I'm just going to go ahead and fill that out really quick. We'll put in, let's do Kevin. I'll put my name in, and I'll go ahead. And after I fill it in with my email, I'll go ahead and click continue into the first little form. Then you're going to get a window that pops up and that asks you, do you want to invest individually or with a partner? And you could select that. So select, in this case, individually. Then a DocuSign prompt comes up and it asks you for your email address again. And it's going to ask you for an authentication code, which then you would just go into your email and get that authentication code. It's basically like a two-factor identification code. So that way, it's not like you have spam bots going in here and doing a ton of applications or whatever. So you get that code to verify that you actually have your email ready to go. So you click the little validate button. And then I'll go ahead and show you the next pages as it comes up here. Okay, good. So now you're going to just go ahead and hit agree to the form. This is the investor application, gives you a quick little background on some of the accredited investor requirements. There it is, 82 was the other license. Now you can upload your proof of accreditation here, ideally just your InvestReady document. You can have a CPA or licensed attorney certify your status as well, along with your 2 years of W-2 for each spouse. You can approve this and you upload your documents. You put in your information here, phone number, social, email, and so on. Then you're going to read here the HouseHack Private Placement Memorandum. After you read and view that PPM, you could go through and initial here that you've read it, that you've gone through these documents, that you're aware that your investment's not guaranteed, that this is an investment in a startup, that there's a lot of risk in a startup, that you could lose all of your money. There could never be liquidity in a startup, right? You could go through the subscription agreement here and read the entire agreement. You would sign that agreement. And towards the end of that agreement, you'll also go ahead and put in how many shares you're looking to buy. Remember, $1 is $1. If you're looking to buy, let's say, 25,000 shares, then you would want to put in 25,000 shares, aggregate purchase price of 25,000. But when you wire money, you'd want to send $25,000 and another $15, so 25,015, because there's a $15 wire fee, and you're responsible for the recipient wire fees. Then you would fill out the rest of the information, social security numbers, telephone numbers, so on and so forth. You complete the document. Then you'll get wire instructions. The wire instructions are at the end of the DocuSign. And that's it. Then we will go through, verify that you are an accredited investor, and we can accept your funds. If we don't accept your funds, you get them back. Any funds that are wired to us go into an escrow company. We don't have access to them until we hit $25 million. So any funds wired to Mission Bank go directly into an escrow company until we hit 25 million that we've raised. So I think personally that this is a really, really incredible opportunity. And if this is something that you want to participate in, I highly encourage you to do so. Obviously, you have to make up your own mind. So if you know, remember, like startups, we have no idea when we're going to IPO, right? We could go bankrupt before we ever IPO. Now, I don't think so, because we're going to buy cash flowing real estate. It's like, you'd have to be pretty dumb to buy cash flowing real estate, especially wedge deals, and then somehow go bankrupt. Like, that's kind of hard to do, right? But hey, you know, crazier things have happened to companies. So you want to be careful, right? There's risk with every investment. I'm just going to be putting a lot of my own money into it. So, you know, I feel like I'm going to be homeless if the company doesn't work out. But again, I expect the odds of it not working out to be very, very low. So, but I can't guarantee that. So anyway, you have to evaluate that. You might not have liquidity for your money for a very long time, though. So if you invested $200,000 now, and then in 2 years, you're like, dang it, I need that 200K, you might not be able to get your money back. We do have an option that we might give to investors to buy back your shares, but it'd probably be at a discount. You really don't want to use that because then you're not getting a gain on your money. You're getting, you're taking a loss. Like I don't, you probably wouldn't want to do that. So you have to be prepared to invest until we actually have a liquidity event, which is either like the company sells or we IPO or something else, right? So the goal is to IPO, because then if we IPO, you had shares from day one, $1 equals $1, and whatever our valuation is in the future, you can just swipe up on Robinhood and sell it, right? That's the goal. But again, that could be in 2028, that could be in 2030, that could be in 2040. I have no idea. My goal is 2028. I want to IPO by 2028. That's 6 years. 6 years should be plenty to get to IPO stage. So I'm very excited about that. Yes. So very, very exciting. Thank you so much for that. Let's go ahead and do a little bit of Q&A since we are live here. It's been about 30 minutes. Good. Yes. You mentioned in the video that we could use a Roth. How would that work? Yeah. So first of all, this is really cool. Let's say you have a Roth and you have money in your Roth. You could actually, and the law, what the law says and then what's practical can sometimes be two different things. But technically the law says you can hold shares of HouseHack in your Roth as long as you are an accredited investor. If you're an accredited investor, you can hold shares of HouseHack in your Roth. And then that means if, let's say, they 20x by IPO, that might be tax-free for you in your Roth, which is like, oh my gosh, like it's really, really awesome. The problem is you're going to have to call your custodian, and they're probably going to want our slide deck, our website, which you could send them our website. Slide deck will be up on the website tomorrow, along with other things. They have to be willing to hold the shares. So you might have to call around to find, IRA custodians basically who are willing to hold on to the shares, which will be an electronic record of shares and everything. So can we make money from the cash flow? Great question. So we don't actually expect to pay dividends for quite a while. So right now, the answer to that we're saying is no. This is a growth opportunity. We're going to take cash flow and we're going to invest it in growing the business. Growing the business means acquiring more wedge deals, especially during a depressed market, and then building software when the market starts kind of like going up again. And we're like, okay, maybe we're not finding as many wedge deals. Let's invest in the software now. Only after we don't see opportunities and we don't have a purpose for the cash, then we might pay distributions. But I would say right now, that's not an expectation. Will you be selling all of your Tesla if needed? Yes, I will be selling my Tesla when it comes. I will be selling my Tesla. I don't know if I'll be selling all of it. I mean, it depends. If Tesla doubles tomorrow, I don't have to sell all of my Tesla, right? So it depends. Where are you looking to buy? Another great question. So this depends. This really depends because every area is going to react differently to these changes in interest rates. And I want to buy deals with that are wedge deals without taking on too much risk, right? If everybody's leaving Boise, Idaho, and that doesn't become apparent until 3 months from now, I don't want to tell you I'm buying in Boise, Idaho. My expectation is that we will buy in Florida, Texas, California, maybe Arizona, Colorado, Utah, Vegas, right? Those sorts of areas, DC, Detroit, the Carolinas, like some of these are on the radar, but you know me, okay? I like safe homes. I like tract homes. I like cash flowing properties. I like cash flowing Airbnbs. I like deals in great areas. I don't like taking risk at all in real estate. Like real estate for me is a low risk endeavor, but I can't make that guarantee to you. So I got to be very, very careful about that. Who will manage the rentals? These are excellent questions, by the way. We are managing our properties in-house. Thank freaking goodness, because property management companies would charge us probably anywhere between 10 to 35% of our rents. Obviously, 35% of the rents would be for like an Airbnb. 10% would be more typical. Maybe you can negotiate that down to like 8, 9% sometimes if you're lucky with a property manager if you have multiple properties with them. But we're going to manage in-house. So we're going to manage in-house, and then that way our management team can be sort of the first customers for our own management software. So again, we're taking cash, we're buying cash flowing wedge deals with cash at first. Like we're not even going to do loans right now. Why would we be doing loans when we have cash to spend, right? So we're not doing loans. We can break that piggy bank in the future. We'll manage the properties ourselves, and we're going to keep costs low. That's the goal. Keep costs as low as possible. Do you consider this more of a wedge flow REIT? No, so I don't actually consider this a REIT at all because A, it's not a REIT. See, REITs don't invest, in my opinion at least, REITs don't invest in creating their own software and potentially licensing software. REITs have to distribute like 90% of their cash, and they have to deploy their cash. So if we were a REIT and we got money, we'd have to go buy money or buy properties, even if we thought the market was going to fall. In 2007, REITs were the ones that got destroyed because they were buying at the top of the freaking market. Why? Because they had to. They got cash and they had a choice: buy properties or give the money back. That's dumb. So we're not a REIT. We're not a syndication. We are a real estate company. Think like Redfin and Open Door. That's what we are. Why not start in California only, as you know the market better than other markets, and branch out from there? We might do exactly that. It depends. It depends. We want to make sure that we can cash flow right away, which we can if we buy properties solely for cash. But we also want to make sure that we invest in the most opportune market. So we don't want to like guarantee that we're only going to start in real estate, but it's possible that we'll in California. But it's possible we'll just start in California. That's definitely possible. All right. Let's see here. You say this company will self-manage the houses. How many property managers do you expect to hire per house? Every individual can manage up to about 150 properties with the right systems and processes in place. So it'll be a while before we really need to like hire a ton of people. And again, this is very important too, because we don't want to like have an army of programmers sitting around on $150,000 to $200,000 salaries and then spending all of our money, right? We're not going to hire in-house programmers. We might even just contract out. We're not going to do anything with programming until we have a lot of cash flow. So that's very, very important. 150 single family homes, sure, but could also be multifamily, anything. Can an accredited investor sell their shares to a non-accredited investor? No. Minimum amount invested is $25,000. And then remember, you get warrants based on when you invest. The sooner you invest, the more warrants you get. I highly recommend, if you were thinking about making an investment, and again, go to househack.com to see it, but there will be deadlines at the end of each of the upcoming months. And so if you are considering investing, I recommend doing so by September 30th, because you're just going to get the most amount of options for potentially contributing in the future. So if you're like, hey, like I want to invest more, but I don't have all the money right now, I want to, ride the market or do whatever, fine, invest a certain amount, get your options at least, and then at least you can invest again in the future up to that option limit there. So it's really an opportunity there. So regarding risks, would you know a few scenarios where the company would fail, such as a change in laws or regs? No, I mean, like, I don't think a change in laws or regs would lead to any kind of failure, because you could just liquidate properties in areas that become undesirable to invest in, right? Like if California becomes this anti-landlord state, you just sell and move. Like it's not that big of a deal. Really, like, what's a bad, I mean, like the worst scenario that you could think of would be, let's say you had like some kind of crazy market crash and you were over leveraged and you had too many employees, right? Like those are the things that you want to be careful of. I would say the biggest risk is employee cost. And that's why that's why I hate cash losing businesses. I want cash flowing businesses. Can you comment more about how you built your internal technology? Yeah, well, I told somebody exactly what I wanted. They're a very good Silicon Valley developer, and they took like 6 months to develop it. And I just kept going back over to them over about a 3-year period of time, paying them for their work, obviously, and saying, let's do this now. Let's do this now. Let's refine this. Let's rerun the algorithm so it relearns based on the latest, data inputs and so on. Ross Gerber is on the board, which is pretty cool. Do keep in mind, though, there is a difference between your shares and my shares and board member shares, and that board members are only getting compensated in the event we sell, liquidation event, selling, or IPO, right? So they have that kind of similar stock structure. And I hold all the voting shares. That's something just to keep in mind as well. So I can fire board members, is basically what that means. Congrats, Kevin. This is exciting. Is the extra 10% warrants for course members automatically applied or recorded? Yeah, there will be a slot in the DocuSign area where you put in the course member email that you have. Let me make sure that's there. Need a spot for course members to add course member email they use to sign up. But yeah, so basically you would go through that process, and then if it's not there, then we could always just email you and say, hey, like, we just want to check, are you a course member or not? And even if you buy the course like that day, like, okay, you could, the current coupon code, by the way, is SEED. It's hashtag SEED. And since you're a course member, you could use hashtag SEED member. But anyway, that's not money that's going to HouseHack, right? That's money that's going to me. But that does benefit HouseHack because it gives HouseHack more cash, more capital in a non-dilutive way. No patents. Can we use the software on our own? In the future, we expect to license the software. We might patent in the future and that, but patents are extremely expensive, and we're like nobody knows about this software other than what you just heard from me. So like, it's like if we were to license it, that's when we would patent it, you know. But right now, it's like, it's right here on my phone. The ownership of all of the software will be sold to HouseHack for, I can't remember exactly what it was. I think it's like $100K or something like that. Basically, just everything that went into that app over the last 3 years will be sold to HouseHack. And then that way HouseHack owns it. And that's not going to be a cash out event. It would probably be considered like shares or whatever. So that is, in other words, if instead of me, if I'm going to buy $10 million worth of shares, I would just send over a wire of 9.9 million. That would just be like the example of that, right? So let's see. Shares, peer-to-peer. Any share transfers have to be approved because both sides have to be accredited. So it's going to be a little tricky there. Yeah, bylaws, all of that stuff is in the DocuSign when you go through it, the PPM, the subscription agreement. It should all be attached there. If it's not, though, and if you have any questions after this live stream, just send us an email to ir@househack.com. I can pretty much guarantee I'm not going to be able to answer every question here because, well, this is just the way live streams work. And so if we miss something, we can always update the website with that information or guide you to where that answer is going to be. The goal is to be as transparent as possible. Talked about non-accredited investors earlier. That's probably a next year factor. Thank you. Thank you so much, Eric. For us course members, we want to join but aren't accredited. Could anything better than 2.5 times book? Possibly. It depends when we do our Reg A and what valuation we do that for. You can download a file. Okay, files only. Yeah, John, what we're going to do is probably by tomorrow, we're going to have a downloads page on the website, and then it's going to have the slide deck, the PPM, the subscription agreement. Everything's going to be there on the website for you to download. So stand by for that tomorrow. I don't know exactly what we plan to do with financial statements yet, but Ross actually had a really good suggestion that I'm really fond of. And he just said, Kevin, just have your financials on the website updating like all the time. Just have them there. Like if somebody goes to househack.com and they're like financials, it's like, oh, here's their balance sheet updated Friday, you know, it's something like that. So I can't make that guarantee now, but I want this to be like the most transparent company to ever exist. And so I'm really excited about that. And Ross, I think actually had a really good idea. Like why wait for every quarter? just put it on the website. So we'll check with attorneys too to make sure that that's okay. I don't see why more disclosure would be a problem. So I expect that to be fine. Thank you so much, Jason. Based on your real estate course, personal story, and watching you on YouTube for the last 2 years, I have super high confidence in you pulling this off. Awesome. Thank you so much, Jason. That's really cool. How many employees does the company have now? And what's the hiring plan? We don't need to hire anybody for a while. Okay. So right now we've got a licensed accountant who is a contractor, but they're pretty much a full-time contractor. And they just work at their own schedule. That's the difference between an employee and a contractor. And they've been doing this for about 40 years. So we've got a licensed CPA there. We've got another CPA who works full-time on salary. So we've got 2 folks in accounting. Really, really important that receipts and the books are perfect. We have got an investor relations person. So that would be 3. Marketing person. Sort of an in-house chief operating officer that works with me on the daily basis. Then we've got me, and we've got 4 people on construction. And construction, I don't want you to think of like going in and doing renovations. I want you to think of construction as property management, coordinating renovations, and basically keeping the ship moving from when we buy a property to when we rent the property out, and then managing callbacks and that. So with 10 people, I expect we should be able to service about a few hundred homes. Like, I don't think we need to hire people for a while. I think we can be in about 5 markets with the staff that we have and service a few hundred homes. So I really, and I'm also not getting paid. So that helps with the payroll costs, right? But a very good question. Very, very good question. I appreciate that. So we can take international investors. It's going to be a little bit more complicated. So I would say if you're thinking about making an international investment, send us an email at ir@househack.com, and we'll work with you on that. So for example, if you're a citizen of a different country and you don't have a social, we'll help you. We'll get that handled for you. The PPM has an about section where there are bios of the board members. It's in the private placement memorandum, which you get under DocuSign. If one will qualify to become an accredited investor with this year's W-2, what can I do? So this would basically be your second year of, let's say, over 200K, right? So in that case, you would be eligible to invest January 1 or like January 30th, whenever you actually get your W-2. Okay, Flame, that's a very good question. Let me check on that. DocuSign page 13 error. Last box asking for social format, but gives. Okay, we will get that fixed right now. Let's see. Okay, we have now added a section for the DocuSign that says for course members, enter your course member email for your 10% warrant bonus. That has been added. And Flame, we will find out right now if that is an issue that is universal or one that just you are having, and we'll get that taken care of. Please put the email address on screen. Yes, I can do that. And the easiest way to do that is just throw that up nice and large here. So that way, if you have questions, if I can answer your questions now, I'd rather be obviously the one to answer your questions, because I feel like, well, you probably want to hear the answer from me. But if you email, that's fine too. Especially if it's like a personal question. Like I respect that. Okay, so we're going to put this email up on screen. ir@househack.com. Keep in mind, we've also got some pretty cool well, I guess I shouldn't go into that now. We have some other like domain rights and stuff, but I don't want to go into that right now, so never mind. Can you put these shares into a living trust? Yes. How will you manage Airbnb properties? Same managers. When does the raise close? Whenever we want. So because the problem is if like we can't take an infinite amount of money because we won't be able to deploy that, right? And we don't want to buy garbage. So once we get to a point where we're like, yeah, this is enough, we'll just close the round. We do not have to wait for any specific date. Technically, the PPM says March 31st, but we'll probably close before that. I guess I shouldn't say probably. I don't know. It totally depends. But we have the right to close at any point without notice before that. Yes, any course worth more than $400 qualifies for the bonus shares. Yes, you can get accredited for an S Corp that qualifies to invest as long as you're accredited. There are also some rules where businesses can qualify themselves if they have a certain amount of revenue, but that would be a Google. If net worth was above 1 mil in April, is it possible to become an accredited investor despite the market downturn? I don't know how long they go back. What I would do, like the easiest way to get accredited that I found, I don't know like how thorough they are, but everybody seems to get accredited with them, is just go to investready.com. Like send investready.com, send us the letter. That seems to be the easiest thing in the world. And it also takes a lot of liability off of our back. So like, I'm just going to give you an example. Okay. And like, nobody should do this, but like if somebody put together like a CPA letter and it was a total fraud CPA letter saying so-and-so is accredited, and they sent it to InvestReady, and InvestReady sent us a certification, like That's InvestReady's problem, right? We are relying on that letter. This is why we just want everybody to go to InvestReady, do it with them. We don't want to do it. Unless somebody sends us like a slam dunk W-2 or you're licensed or something like that. So yeah, you can't really tell what a targeted cash on cash return would be because that's different for every area that you would invest in. In Idaho, you could be at 10%. In California, you could be at 3%. But then again, in parts of California, you can rent them out and be at 15%. You could be better than Idaho. So it totally depends on what the market is at the time, what market prices are at the time. Those aren't projections that we could give you right now. Do you need PMs? Do you need property managers close to the actual property, or do you? No. I'm not going to be handling things remotely. I'm going to be traveling a lot. Like this is my full-time job, right? So, okay. And that social security number, Flame, has been fixed so that it's no longer a date field. It looks like there was a difference between single and joint, but both of them should be working now. Very good catch. Thank you for that. You might have to refresh. Hopefully it doesn't make you go all the way back. So, yeah, that's okay. Let's go on to the next question. Well, right now I'm paying all of the employees that we have, and I'm going to be paying them up through the beginning of the quarter, which will be October 1st. And then we'll figure out exactly, from when we began working on House Hack and work that back. That's like an accounting and CPA question, but everything's starting October 1st with actual like company cash flows and that. Let's see. I'm not sure what you mean with deploying the funds. I want to be clear. If we have cash, what we'll probably do is have that in like short-term treasuries, like 3-month treasuries. They don't fluctuate in value, but you get like tiny little distributions of cash. So that way the cash earns even just a tiny little bit of interest. Something like that is what we'll expect to do. Can I leave my investment to a non-accredited investor if I pass away? I believe the answer to that is yes. I don't see why not, because it becomes part of the estate. And I would expect that the estate inherits your status as an accredited investor. So I don't believe that's an issue, but I can't give you a certainty right now. Lauren is part of the company. Lauren is an early employee who has the same stock incentive as the other employees, which is 0.3%, 0.3 or 0.33. I'm not sure about that. An IRA would count for the $1 million limit, but just keep in mind there will be the qualification that this has to be net of debt. So what that means, like, and again, we don't want to do this, like go to investready.com, but if you had, $1.2 million in a brokerage account or an IRA or whatever, and you sent that to us, we would technically have to run your credit report and then subtract liabilities. Let InvestReady do that. Like you pay them like $45 or something like that. You will pay us more just for a credit card than if you just do it with them because they have the scale to handle that. Will I be a real estate licensee in another state? No. We are going to rely on other agents throughout the country. My goal isn't to do deals as an agent. That might happen if it's like in my backyard or I come upon a deal myself, but that's not an expectation. I would expect that to be extremely rare. I'm only licensed in California. I don't want to get a license in another state. I want to use other agents because what I really want, I really want to give you a good bottom line of all of this is I want this to be a people business where people are like, I want to rent from House Hack. They're the best landlords ever. They, have equity awards for tenants and agents or whatever. Like imagine this in the future. An agent brings us a deal and we reward them with equity in House Hack. Well, now that agent is technically a part owner of House Hack, right? Just like anybody on the stock market can get some shares. That agent's probably going to be a lot more incentivized to bring us their next wedge deal, right? Like this is a people business. This is about connections. The links to downloads are coming tomorrow. Those are going to be for the slide deck and for the PPM and essay. However, you can get them now if you go through the DocuSign prompts, or just wait until tomorrow. I'll send an alert when those links are ready. Will we have a phone number to call? Absolutely. You can write the phone number down right now. I will give you the phone number. I actually think it's a really cool phone number. Right now, it is only set up as sort of like a prompt where you can leave a voicemail and get wire instructions and that. But you could write the number down if you want, and you can't text this number. This is just a voice call. So that way investor relations can call you and talk to you or answer your questions over the phone or whatever. That phone number, like a real phone number, is 805-888-0846. That phone number literally has 5 8s in it, which is like really dope. But anyway, 805-888-0846. That is the investor relations phone number. I suppose I can go ahead and put that on screen here too. 805-888-8046, I believe I said. 0846. 0846. There we go. All right, so I'll throw that up on screen as well, just so you have that handy here in case you want to write that down and see it in large letters there. Okay, good. How do agents bring wedge deals to House Hack? TBD. Once we determine our markets and once we determine when we want to invest, that's when we're going to put a call out to agents and to vendors and everything. You could ask us if we want to buy your shares back if you want to sell them before IPO. That's not a good idea, though, because we would probably only offer to buy them back at a discount, if at all. So you don't, if you really need liquidity before IPO, this is probably not the best investment. Like startups are notoriously illiquid investments. I don't expect the company to sell before we IPO. Usually when companies get gobbled up, they get gobbled up by a company that's already public. So like, for example, let's say we were bought by Open Door tomorrow and they're like, no, like you guys are way too dangerous for us. Like, please let us buy you out right now. Well, then you would get shares of Open Door at some kind of, premium, presumably. And there you go. Then you could liquidate those shares. But again, I don't expect that to happen because I want to IPO this company. And heck yeah, we're going to broadcast this journey. In fact, what we're going to do is we're going to make this this whole launch public Sunday at 9 a.m. We'll have a launch video for the public. Remember, the public will not be getting those course member warrant bonuses. We thought to ourselves like, hey, look, we're going to give this all to course members early. But then I'm like, you know what? That's not enough. We got to do more for course members. What else can we do for course members? And so a 10% bonus on the warrants, I think that's a slam dunk. So thank you so much for being here. Last question I'm going to answer is here. Somebody asked, how are you going to manage properties remotely? We are not managing properties remotely. I want to make that crystal clear. I appreciate you because I've been asked that like 3 times now. I appreciate that question. It just means I have to make that more clear. We are not doing this remotely. We are going to set up either employees, we're going to station them in certain areas, or we'll just have like mini offices in the areas and grow as we need to. So if we have 20 properties in an area, well, we just need one person working out of an apartment or whatever, right? Living in that area. Let's say it's Austin, Texas, right? Go rent an apartment, go manage the units. You're in control over there. Kevin flies there, every couple weeks, whatever, something like that. If we have 200 properties in Austin, Texas, well, then we're going to need an office there. We'll probably have, 2 or 3 people in the area. And then 2 or 3 people can scale an office substantially faster, depending on our mix of short-term and long-term rentals. So we are going to be managing properties locally. Like we're going to be there. And that's the way you grow a company. I can't be everywhere every single day, but I will be traveling a lot. So thank you very much, folks. Really appreciate you. And we will see you soon. Goodbye.